I'm guessing there might be some liquidation.
Hi, everybody. Welcome back to the Comstock channel. I'm Marlin Bohling with you. Always a pleasure to have you with us on these episodes. Well, today I have Randy Dickhut with me, and he is a well-known, nationally known farm appraiser, a farm manager. He's had tons of experience. And Randy, thanks for joining us here today. I appreciate that. We are into that time of year where a lot of times you have to be concerned about what the farm market prices are going to be doing. Have you had a chance to track any land sales that have taken place so far here early this year?
I have, I watched some of those, and they seem to be, well, post harvest, things kind of stabilized and strengthened a little bit in some markets. A few markets still they were weaker, in that neighborhood that there's not an aggressive buyer, or they're being more careful, with their cash to make a purchase of something they were, targeting specifically. But in other areas, there have been some good sales. There have been a few good sales in Iowa. There's still good sales all around northern plains. Seems to have some pretty good prices. They may not, they're not the tops that we've seen the last couple of years, but still strong sales, especially given the low commodity prices.
I just wondered how much of a slide in value we could expect to see here this spring.
Well, we saw, depending on the state, depending on who survey it was, who tallied it, and the time frame, we saw 3 to 8% dip in values overall, and in many of the states, and that was kind of towards the end of the year, but not post harvest. So I think it's stabilized there. And looking ahead, it seems to be, because we have, again, I think a little slower market with the amount of land for sale. So there's adequate demand typically for what comes up for sale. And I think farmers felt in some places a little better because they had good yields and prices, again, rebounding some. And there's some money coming from the government that isn't large, but it's going to add to that cash balance and help anybody out. So I think all that together will kind of stabilize prices, and I see them kind of flat probably for a while here.
Do you think farmers are having trouble getting enough financing this year?
I hear that, and I see it reported in some places. The statistics, and they're always looking back, like the Federal Reserve's report and so forth, don't look too bad, as far as loan losses or non-performing loans. But again, those are backward looking, so we really don't know until we get through the renewal season here by spring planting. That will really tell us the situation. But I know, in the bad times, there's always those who struggle and those who do fairly well, and in the good times, there's those who still struggle and those who do very well. So I think we'll definitely see more financing issues. I mean, it just stands to reason with the lower commodity prices.
I had to wonder if pasture land, relatively speaking, was holding up better than what cropland is this year, just because of the value of cattle now.
Yeah, that's what I've seen most places, especially, oh gosh, in earlier in 24, when cropland values started to kind of moderate and soften some. Pasture definitely held its value, and you're exactly right. Cattle prices, it was a good time to be a cow-calf operator, doing as well as they've done for a while, and pasture is in good demand, or a good pasture anyway. So yeah, it tended to hold better through the last couple of years.
Well, of course, we know how the long-term interest rates have been rising, even though the Fed has come down. And I just wondered how much impact that had on things like maybe farm equipment loans compared to real estate loans, because those are really much longer term. And did it impact those very much or not?
Well, again, I think most of our statistics are backward looking, or there takes a while to catch up to what's happening. But yeah, I think, gosh, I've seen it. There's usually a 18 months to 2 year lag from interest rates changing, what I read, where they really impact the land market. And I saw some statistics on that, a while back, that certain percentage of the um, short-term rates on farmland loans were going to reprice. They had maybe a 5-year window, and they repriced again some of those. So there's going to be some repricing with interest rates moving up on people's loans. So that's going to hurt that cash flow, and that takes a little enthusiasm or steam out of bidding up land prices. Equipment, I think, responds a little faster. The other thing going on with equipment and input pricing is all the vendor uh, credit that's out there. That continues to be a growing segment of the farm finance market. So the lender credit, which is off the bank's books, loan books and so forth, is growing. So a lot of time, as you know, whether it's a car, whether it's a home appliance, or whether it's a tractor, there might be some special incentives on vendor credit and financing. So I think it takes a while to see the full impact. But these higher interest rates staying high longer than everybody first anticipated will continue to have an effect, because it'll keep ratcheting up some of those interest costs.
Randy, we have a new administration in office now, and I just wondered how tenuous the situation is with foreign land ownership. I just wondered if there's a push. Well, the one in the limelight, of course, is Chinese land ownership in many parts of the country. And what would happen if that has to be liquidated, or how would that impact land values?
Right. Well, the thing about it, I did see recently there are 19 different states that have some proposed legislation on the books about foreign land ownership. And again, you're right that it's normally targeted at China, Russia, Iran, and North Korea. But China is the one that everybody looks at. They actually own a very, very, very small portion of farmland. So if it had to be liquidated, as happened in Arkansas, it's not a huge piece of it, and it's scattered around in different areas. Um, you know, Strategically, that becomes a concern too. But I think it's small enough that it wouldn't impact the market unless there was a really big amount in one small specific area. So I don't think if it's liquidated, it'll be a big impact. And then all the other countries, I think, is not a problem, because it's longer standing, much longer, and there's not the security issue that's supposed to be with China.
So do you think other states will follow the lead of Arkansas, though?
I'm guessing there might be some liquidation of some more land. Part of the land holdings, I believe, are by the pork processing and production companies, and so you got some different ties in there too because of the land. But I think some of that's already started to happen. So yeah, I think there'll be some other follow through, or just some pressure to do that. Just kind of seems to be the mood of the country right now, to make those things happen.
So how do you think the listings are in number now compared to maybe a year or two ago?
The number of sales we have had has been a little bit slower, more back to average, because whenever the prices go up, you get more sales. People or families, or that investor says it's time to sell. When they get lower like this, it seems to slow down unless there's a real problem in the market. Also, I think people may tend to hold on to the land, but waiting to see, what happens with farm economy, what happens with inflation, what happens with the general economy, and some, legislation, things like that. So I think it's definitely gotten a little bit slower, and probably will be for a little while here until some more things shake out.
So if land values are easing up a little bit, would that be a good thing or a bad thing for young farmers trying to start out?
That's usually a good thing. Makes some sense, unless they're depending on equity in some land that they already have to help support the next purchase. That's the double-edged sword. But normally, with land values softening some or dropping, again, makes a lower entry price to buy that land. Also, then typically rents will follow and soften some, but that's a gradual and not a one-for-one event. Again, depends on wild card is production around the world and the markets and tariff questions now and world weather and just a lot of things. But yeah, I'd kind of watch the market for a year or two and see what happens.
Well, I don't want to give too much away, but I believe you and I were both around in the 1980s when things were kind of hard in farm country. And there's been a lot of talk about the way the farm prices on commodities have really dropped off in the last year or so. But do you see any correlation at all to what we're going through now with the farm economy compared to back in the 1980s? I mean, is it even close or not?
I've thought about that recently, and what you're alluding to is what I call our frame of reference. Those of us who, I grew up in high school farming and walking beans and cultivating and plowing and all those things you did. So you farmed for several more decades and stuff, and then involved in agriculture. But so the frame of reference saw land values go up to a high of about $3,000 an acre for a good farm in my area in about 1980, 81, and see it drop to half that, 1,500, about 6 years later. And it took almost 20 years to get back to that $3,000 per acre. So I don't think we'll see anything like that because so there's the dissimilar. We had the high inflation rates. If you remember, we paid 10, 12, 13% on operating loans and mortgages and stuff. And, yeah, made it work and stuff. And you farmed on the margin for sure. But so I don't see that. I think when the land values dropped, a lot of forced sales came on the farms and stuff that pushed too much out on the market, made it even worse. The things have changed though. I think there's more risk in farming because equipment's larger and more expensive, and with technology it trades more often to keep up with that, so you are efficient. There's definitely more almost predominant cash rent type leases, and so that puts the pressure on the producer. To balance that, we have crop insurance, so that took some of the risk out, and I think that's capitalized into farmland values and stuff. So bottom line, I'm still got that in back of my mind that things can happen and that you don't really expect, and it can get worse than it is. But yet demand for farmland, water scarcities around the world, potential new uses for farmland with energy, renewable energy developments, renewable fuels. If those things come about, as people think, puts a different demand set on typical cropland in our country. We didn't have ethanol and biofuels back in the 80s to create that demand for the crop. Now we have a big segment of demand that's there. And unless that changes, I think there's a little more stability today than there was then.
All right. Well, Randy, thank you so much for joining us today. Appreciate all your insight into the farm values, especially as we head into 2025 now. That's Randy Dickhut, and we thank you for joining us. Appreciate that very much. For producer Brianne Jenkins, I'm Marlin Bohling, and we'll catch you next time right here on the Comstock Channel. Futures trading involves risk. The risk of loss in trading futures and/or options is substantial, and each investor and/or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.